In Chapter 4, we start process costing. In Chapters 2 and 3, we looked at job order costing. And job order costing you use when you have single products that each are so different that they need to be costed separately. In Chapter 4, we're looking at a process that you use when each item is exactly the same. So you tend to separate them out by process rather than by job. Both systems, meaning job order and process costing, assign direct material, direct labor, and overhead costs the same way. They both have the same inventory accounts, such as raw materials, work in process inventory, and manufacturing overhead. They also have the same finished goods cost and cost of goods sold. The difference comes in the work in process inventory. With job order costing, you have one work in process inventory. With process costing, you separate out the manufacturing process into different departments, and each department has its own work in process account. Okay, let's look at the flow of materials. When a job is requisitioned, direct materials will be brought in from raw materials inventory into work in process. So into the work in process inventory accounts, you will get direct materials, direct labor, and manufacturing overhead. Then, once you are finished making this product, it will be moved from work in process into finished goods and then eventually sold and taken a cost of goods sold. One of the changes here is in job order costing, you look at what has happened at the end of the, we assume, well, actually, when something is finished, you transfer it into finished goods. But with process costing, you calculate equivalent units of production at the end of the month, and that is how you calculate ending inventory. In addition to the direct materials that are brought into work in process, direct labor is also brought into work in process, and manufacturing overhead. Okay, so let's look at this example where we have two departments. We have Department A and Department B, which means we will have two work in process inventory accounts, one for Department A and one for Department B. This is going to look similar to how we did job order costing. We have raw materials inventory, and when it's requisitioned and sent into work in process, we credit raw materials inventory and transfer it to the work in process account with the debit. But we may have two departments, and each department is going to have its own process of materials added in. Let's look at making crayons for a second. In Department A might be where they add wax, melt it, and add the color. So direct materials are going to be added to Department A of wax and dye. Department B is where they're sent to cool, and then they wrap it in the paper. So the direct materials that are added into Department B would be the paper that's wrapped around the crayon. Each work in process department for each process can contain direct materials, direct labor, and overhead, but it doesn't have to. It depends on what the process is. So the journal entry would be to debit work in process inventory for Department A, the amount that's transferred into there, and then debit work in process inventory Department B to transfer what is in there. And then the total credit goes to raw materials inventory as it's taken out of raw materials. We can do the same thing for labor. And right now we're just talking about direct labor because indirect labor goes to manufacturing overhead. Okay, so direct labor is taken from salaries and wages payable into each department. You will have employees that work in Department A, and you will have employees that work in Department B. Each department is its own cost driver and needs to be costed separately. because each will have its own supervisor, maybe even its own manager, and they are responsible to contain their costs. So any employee that works in that department is going to be charged their labor. The journal entry for labor is similar to job order costing. It's just we have more than one work in process account. We will debit work in process Department A for the employees that work in Department A. We will debit work in process Department B for the employees that work in B. Then we will credit salaries and wages payable. Okay, then we come to manufacturing overhead. We will go from manufacturing overhead into the work in process departments according to the predetermined overhead rate and the amount of machine hours or labor hours that are worked. We will credit manufacturing overhead, the applied, and then debit Department A and Department B work in process inventory for the manufacturing overhead. This is the same process that we use in chapters 2 and 3. The only difference is you have more than one work in process because you have more than one process to make a product. So debit each department the work in process for the amount applied to overhead, and then credit manufacturing overhead. When working with process costing, you will have different departments. Using the crayons as an example, you have Department A, which takes the wax and melts it and adds the dye to make the different colors. Then Department B will cool the wax and then wrap it in paper. You can't go to Department B until it's been through Department A. So there's a process here. So another journal entry will be to transfer the items that are done in Department A and ready to go into Department B. Just like we transfer raw materials from raw materials into work in process, then it stays there till it's completed, then it's transferred into finished goods. Now, since there are more than one work in process accounts, it will go from raw materials into work in process Department A. When it's done in that department, it'll be transferred into work in process Department B. And then if that's the final process, it'll then be transferred into finished goods inventory. Debit Department B work in process to add the items that are being moved into there, and then credit work in process Department A once they're complete to take them out. When the items are finished with the last department, they're transferred from that last department into finished goods inventory. And we learned in chapter 3 that the cost of goods manufactured is just what is sitting in the ending work in process inventory that's going to be transferred into finished goods. This is the cost of goods manufactured, not the cost of goods sold. It's just the cost of all of the products that are done. Everything that we have completed that month, that is cost of goods manufactured. And that is going to be transferred from work in process into finished goods when the crayons are finished. We will debit finished goods and credit work in process inventory, Department B. When the items are sold, we will take them from finished goods into cost of goods sold to recognize the cost. Because what's sitting in cost of goods manufactured right now is the cost of the direct materials, cost of the direct labor, and the applied overhead. All of the costs are sitting in finished goods inventory, which is an asset. You don't want to keep the costs in the asset account. You want to transfer them to cost out the expense of making that product. And by doing that, once the items are sold, you transfer it from finished goods into cost of goods sold. Debit cost of goods sold and credit finished goods to do that. Now, we will get to the end of the month and we will have some units that are completed and some that are partially complete. We need to be able to, on our balance sheet, show how much is in inventory. So we're going to take these partially completed units and look at what are they equivalent to of completed units. If we have 4 units that are halfway complete, that means each of the 4 is halfway complete. The 4 half incomplete is equivalent to 2 complete. So we would figure out the cost of a complete unit and multiply it by 2. And that will be equivalent to 4 units that are halfway complete. Okay, with process order costing, every item is the same. So it is usually done in an assembly line with little or no direct labor. Machine hours drive process costing. And we've until now talked about direct materials, direct labor, and manufacturing overhead separately. When direct labor is such a small amount of the cost of the product, a lot of companies will take that direct labor and add it to manufacturing overhead and just look at 2 costs, direct materials and conversion cost. Conversion cost is a mixture of direct labor and manufacturing overhead. Instead of having the 3, because direct labor in process order costing is usually minute, they just go ahead and they add it to manufacturing overhead. Okay, so we're coming back to the equivalent units, and we're going to look at these partially completed units and what percent completed they are. They may be 100% completed with materials, but only halfway completed with conversion cost, which is manufacturing overhead and direct labor. It could be at the beginning of the process, all the material is added, and they're only halfway through the process. So all the material is added, and what's left is just the manufacturing overhead and the direct labor. That is one reason why they separate out the direct labor, the direct materials and the manufacturing overhead. Okay, equivalent units equals the number of partially completed units times the percentage complete. And I use the example of 4 halfway complete items is equivalent to 2 complete units. Okay, let's practice calculating equivalent units. Assume Department A has 500 units in its ending work in process inventory, and they are 60% complete. These 500 partially complete units are equivalent to 300 fully complete units. Take the 500 times the 60% complete, and you get 300. Department A's ending work in process inventory should contain the 300 equivalent units for the period. Okay, if you have 500 units at the end of the month, it's sitting in work in process inventory, and they're 60% complete, to figure out what the equivalent units of completed units you would have, take that 500 partially complete, multiply it by the percent complete they are, which is 60, and you get 300 units. Those 500 partially completed units are equivalent to 300 completed units. Another example, if you have 15,000 units, 10,000 are completed, and 5,000 are 30% complete. What do you have in ending inventory? We will have to figure out what 30% of 5,000 is, and that's 11. That is 1,500. The partially completed units are equivalent to 1,100 completed units. Add that to the 10,000 units that are fully complete, and you have 11,500 equivalent units. Okay, let's look at another example. Let's look at the steps that we go through. Work in process on June 1st, we have 300 units. Units started into production in June was 6,000. That's a total of 6,300 available. Units completed and transferred out of Department A during June is 5,400. What's left then is 900 units. Those 900 units are 60% complete for materials and 30% complete for conversion. I had talked earlier about how conversion cost is direct labor and manufacturing overhead. When you're looking at the partially completed units, some of them may be complete to materials and not of conversion, or vice versa, or a different percentage. They don't have to be the same percent complete for materials as they do for conversion. The units that were completed and transferred out, 5,400, were 100% complete for materials and for conversion. But the 900 units at the end of the month were 60% complete for materials. That's $540. 540 units. Add the completed units transferred plus the work in process at the end of the month is 540. You have total in the month of June equivalent units of production of 5,940 with respect to materials. Then let's go back and look at those 900 units that are partially complete. There are 30% partially complete for conversion. 30% of 900 is 270. Take the 5,400 of completed units plus the partially completed units, 270, and add them together. You get equivalent units of production in June for conversion cost of 5,670. The equivalent units of production is always going to equal the units completed and transferred. Here that's 5,400 plus the equivalent units remaining in work in process, which is the 540 for materials and the 270 for conversion. Okay, now let's look at the beginning work in process of 300 units. We are told that they are partially 40% complete, and that total is 6,119. For conversion, they're 20% complete, and that's 3,920. They started into production during June, 6,000 units. They completed during June, 5,400. The cost added to production in June for materials was $118,621, and for conversion was $81,130. Okay, we're going to use these numbers and we're going to calculate a few things. Okay, let's go back to those 900 units that are 60% complete for conversion and 60% complete for materials and 30% complete for conversion. What we need to do is we need to calculate the cost per equivalent unit. We know how many units are sitting in ending inventory partially complete for materials and for conversion. We just calculated that. But we need to know what that cost is per equivalent unit. You take the cost of beginning work in process inventory and you add the costs added during the period. Then you divide it by the equivalent units of production. Okay, so here we have the costs for the problem we've been working with. You take your work in process inventory for conversion for materials, add them together for your total cost of $10,039. And then the cost added in assembly, you take the cost for conversion for materials and you get a total. Add the work in process to the cost added and you get your total cost. Okay, we've already calculated what the equivalent units are for those units. $59.40 for materials and $56.70 for conversion. We're going to calculate what that is per unit. Take the total cost for materials of $124,740 and divide it by the equivalent units of $59.40, and you get $21 per equivalent unit. Then do the same thing for conversion. Take the $85.50, the total cost, and divide it by 5670 units. You get $15. Now this is your equivalent unit for materials and your equivalent unit for conversion. Add those two together and you get a total equivalent unit cost of $36 per unit. We know the equivalent units of the partially completed units in reference to the 900 units. They're equivalent of 540 completed units for materials and 270 completed units for conversion. Multiply those now by that cost per equivalent unit that we just calculated. And now we know for our ending work in process inventory, in regards to materials, it is $11,340 and conversion is $4,050 for a combined total in ending work in process inventory of the 900 partially complete units is $15,390. Then let's look at the units that were transferred. We transferred 5,400 units that were complete, which means there were 5,400 units for materials, 5,400 units for conversion. Now multiply those by the cost per equivalent unit of materials and conversion, and then add those together, and you get 194,400. Now, the last thing we're going to do for the chapter is look at a cost reconciliation report. We're going to calculate the cost to be accounted for, and then we're going to calculate the costs accounted for. For the cost to be accounted for, we're looking at the cost of the beginning work in process inventory that was given to us, then the cost added. We get a total cost to be accounted for of $209,790. Now, when we're calculating costs accounted for, we should end up with the same number. This time, instead of taking the beginning work in process to look at the costs accounted for, we need to start with ending work in process inventory, and then add to that the cost of units transferred out. Add those two together and it will equal. So the total cost to be accounted for should equal the total cost accounted for. This is the reconciliation report to prove the department costs. And that is it for Chapter 4, Process Order Costing.